Hello friends, I'm Dr. Dhaval Shah from Patan, Gujarat. I'm member of Profit from It family since June 2020. It provides excellent platform to learn stock market analysis. I feel proud to be a member of this family. I'm really thankful to Mr. Piyush Patel sir and Profit from It family for providing such a wonderful platform. First of all, disclaimer. This is students' presentation for learning purpose. Please take advice of your financial advisor before investing. Today's topic is H1 or Quarter 2 result update of Maruti Suzuki. Friends, before directly starting presentation of actual result update of Maruti Suzuki, I would like to speak few words over cars and utility vehicle sector. There are three listed companies under cars and utility vehicles: Maruti Suzuki, Mahindra and Mahindra, and Force Motors. Approximate market cap of industry is 3.4 lakh crore. Contribution of Maruti Suzuki is approximately 67.5%. Approximate sales of industry is 1.4 lakh crore. Mahindra and Mahindra contributes 50.7% sales mainly through tractors, while Maruti contributes 48% sales mainly through passenger vehicles. Approximate profit of industries 5,778 crore. Maruti contributes 74% of total profit, while Mahindra and Mahindra contributes 25.6% of total profit. Overall net profit margin of industry is 4% only. Now, compound average growth of sales for last 11 years in Maruti is 7.3%, in Mahindra and Mahindra is 10.2%, in Force Motor 5.7%. Now, compound average growth of profit for last 11 years in Maruti is 5%, in Mahindra and Mahindra minus 4.3%, while industries average compound average growth for sales is 7.8%, and that of profit is 0.34%. Now, about compound average growth of sales for last 5 years, which is 3.7% in Maruti, minus 0.9% in Mahindra and Mahindra, and minus 8.2% in Force Model. While that of profit compound average growth for last 5 years, minus 1.0% in Maruti, minus 8.6% in Mahindra and Mahindra. So ultimately, Maruti has highest market cap due to high profit growth than Mahindra and Mahindra. Let's see quality parameters. Net profit margin of Maruti is 6.24%. That of Mahindra is 2%. Of Force Motor is minus 6.1%. Interest coverage ratio, or we can say debt paying capacity of Maruti is 22.7%, which is highest among all three companies. That of Mahindra and Mahindra is 1.69%, and in case of Force Motor, it is minus 5.75%. Now about debt plus lease equity ratio, which is almost zero in Maruti, 132% in Mahindra and Mahindra, and 27% in Force Motor. So we can say Maruti is almost debt-free company. Now about return on equity, which is 29 in Maruti, which is highest, 3 in Mahindra and Mahindra, and minus 9 in Force Motor. Now industry's average net profit margin is 4, while that of Maruti is 6.24. So it is higher than industry's average net profit margin. Now industry's average interest coverage ratio is 2, while that of Maruti is 22.7. Return on equity of industry is 7.59, while that of Maruti is 29. Debt plus lease equity ratio of industry is 58, while that of Maruti is 0. So Maruti is best among this sector. in case of net profit margin, ICR, return on equity, and debt equity ratio. Now about current year trend of industry. Sales growth for 1 year is minus 16%, while profit growth for 1 year is. Conclusion. Maruti has highest market capital, good sales, highest profit, highest net profit margin, highest interest coverage ratio, highest return on equity, lowest debt equity ratio. So, Maruti is sector leader. Friends, next few slides will be that for Maruti Suzuki. Maruti Suzuki India Limited, which is formerly known as Maruti Udyog Limited, is an Indian automobile manufacturer. It was founded in 1981 and owned by Government of India until 2003, when it was sold to Suzuki Maruti Corporation. As of September 2021, Maruti Suzuki has market share of 49% in Indian passenger car market. Friends, Maruti had started its journey in 2004 with sales figure of 9,373 crore, and as of now in 2021, it has sales of approximately 70,333 crore. So, approximate compound average growth of sales for last 17 years is 12.5%, and sales has increased 7.5 times than sales in 2004. Maruti had started its journey in 2004 with profit of approximately 542 crore, and in 2021 it has profit of approximately 4,230 crore. So friends, approximate compound average growth of profit for last 17 years is 12.85%, and profit has increased 7.8 times than profit in 2004. Sales of vehicles in 2004 were approximately 4,17,436, and in 2021, total sales numbers are 14,57,891. So friends, approximate compound average growth of sales of units for last 17 years is 7.63%, and sales has increased 3.49 times than profit in 2004. During last 2 years, due to COVID pandemic and recently due to semiconductor issue, sales and production of unit has decreased. Most probably, this issue will be resolved soon. And we may see the lifetime high sales of units and so lifetime high price of sale. And this is a list of sales of units in September 2021 and September 2020. The various peer group companies in passenger vehicles. Friends, see, Maruti has almost 43% stake. So Maruti is sector leader. From 2004 to 2021, unit sales growth is 3.49 times, sales growth is 7.5 times, and profit growth is almost 7.8 times. From 2004 to 2021, reserve has increased from 9,420 to 52,350 crore, which is 5.5 times growth. At the time of IPO in 2004, price point of Maruti was 115 approximately. Current market price is 7,200. So it is approximately 60x growth in price. Net profit margin is between 5 to 10%. Average net profit margin 7% in last 17 years. Let's see about current trend. Friends, to know the current trend, let's compare the data from last 4 quarters to previous year's last 4 quarters. Sales growth has serially changed from minus 19.4% to minus 3.1% in annual data and 332% in Q1 and 59.2% in H1. In Q1, 332% sudden rise in sales growth is due to complete muted phase in previous two quarters due to COVID pandemic. Again, in H1, 59% sales growth is very good. We may predict 30% sales growth in financial year 2000. Estimated 1,16,000 vehicles could not be produced owing to the electronics component or semiconductor shortage, mostly corresponding to domestic models. The company had more than 2 lakh pending customer orders at the end of quarter, for which the company is making all efforts to expedite deliveries. Margins. Margins has serially changed from 7% to 6%, then 3%, and recently 2% in H1. This quarter was also marked by an unprecedented increase in price of commodities like steel, aluminum, and precious metal within span of 1 year. The company made maximum efforts to absorb input cost increase, offsetting them thought cost reduction and passed on minimum impact to customer by way of car price increase. With this, net profit came down. We may predict 4% margin in financial year 2022. Total number of units sold in H1 of financial year 2020-21 was 4,69,729, which has increased in quarter H1 of financial year 2021-22 to 7,33,155 units, which is around 56% growth. The company sold a total number of 7,33,155 units in H1 of 2021-22. Sales in domestic market stood at 6.28 lakhs. Export in this half year were at 1.4 lakh units. Export sales were the highest ever in the company's history, and the figures of the first half year exceeds the full year sales of last year. 56% unit sales growth suggests we may see lifetime high sales of units in coming quarters and lifetime high sales also. As soon as these targets achieved, we may see the lifetime high price of stocks. Sales has increased from 24,700 crore to 39,300 crore in H1, which is 59% growth, while profit has reduced from 1,151 crore to 962 crore in H1, which is minus 16.4% growth. Profits are declining, but positive sales growth will compensate it. Current year sales 70,333. Estimated sales for 2020-22 91,433 crore. Estimated sales for 2025 1,21,700 crore. Estimated gross sales of 2030 2,87,000. For 2035 4,62,000. Current year profit is 4,230 crore. Estimated profit for 2022 3,657 crore. For 2025 9,000 crore. For 2030 15,000 crore. For 2035 24,000 crore. Current year EPS 141. Estimated EPS for 2022 121. For 2025 313. For 2030 544. For 2035 943. Estimated fair value for 2022 2,600. For 2025 6,750. For 2030 1,100 11,700. 100. 2035, 20,300. About shareholding pattern. Comparative data of 2011-12 to 2021-22. Suzuki Motor Corporation has increased their stake from 54 to 56%. Mutual fund has increased stake from 3 to 8%. FPI increased stake from 19 to 23%. Financial institution reduced stake from 15 to 8%. Retail investor reduced stake from 8 to 3%. NRI or trust increased their stake from 0 to 2%. Now about major expense. Major expense is mainly due to cost of material consumed, which is about 50% of total value. And rest of the major expense contributed by finance cost, other expenses, purchase of stock in trade, change in inventories of finished goods, work in progress, and stock in trade, employee benefit expense, and then depreciation and amortization expense. Trends. For total portfolio allocation should be 1 to 2% only. New buying should be done in whole range of 6,600 to 5,700. You can up to 10% profit during recovery near 9,700 rupees. Moral of the story. Big boss demand is back. Semiconductor and commodity price hike issues are short-term issues only. They may resolve very soon. And ultimately, the best investment is you can make investment in yourself. The more you learn, the more you will earn. By Warren Buffett. Thank you, friends.